Hello and welcome to the channel. My name is Patrick and today we are going to look at the latest in the chart regarding Bitcoin, Solana and also Ethereum. We will also have a quick look on the principal component analysis as well as where we are in Euler's exponential regarding Bitcoin. But first, a quick reminder that there are no financial advice shared on this channel, this video or anything else. Just me, my own thoughts and ideas that I'm sharing with you. So if you remember, you know that we have identified this pattern, basically that on Saturday, we have all these boxes here are Saturday and Sunday. And as you can see, we're low on Saturday and then we have some kind of smaller pump on Sunday. And we have had that for quite some time now. So in my last video, when it was Saturday, I announced that I will in fact trade that and make a new entry here, which I also did. And Sunday pumped well and we pumped all the way up to here somewhere. And this is basically the similar strategy that I've had before. Basically, first we buy the dip, then we buy in the consolidation at a point that seems more likely, and this time it was based on this weekly pattern, the Saturday-Sunday pattern, and then when I'm planning to buy next is on the breakout. So I try to avoid buying when we're close to this resistance. For you that have been on this channel for a while, you know that we did buy the dip here. Then we bought this consolidation when we bounced here, and then on the breakout here. So it's a 1, 2, 3 step method, which I'm basically repeating now with first step, second step, and then I'm waiting for the third step. Now, if it will be so that we keep consolidating here, I might do the same trick again and try to buy on Saturday to get a good entry. I usually do not sell on Sunday just because I cancel a profit. I just put in a stop loss in profit. So all the trades are secured in profit as soon as possible. Now, as with all patterns, they do not last forever. This pattern have lasted for quite some time. So eventually it will, of course, disappear. You may also know that some months ago this pattern was the opposite. It was buy on Sunday and pump on Monday. Then I suspect someone saw that and started to buy on Sunday, so that I moved the pattern. So now we get these small pumps on Sundays, and therefore Saturday makes good entries, or have done so far. If we move over to Solana, which you remember, we bought here at the support. And then I did in fact sell here when we dipped down below. And as I said here, my own personal idea, no financial advice, is that I do not think I enter until we break this old resistance again. If this is an ABC wave, as I have drawn here, the idea is that we should now go up in a 5-wave pattern after this first correction, something down and then keep going up like this. But we don't know that for sure, at least I don't know, maybe others know. Because I also see a risk that we get trapped in this channel again and keep going, maybe even keep going down. So that is why I felt that I wanted to take out that profit. Also, this was also bought on a traditional exchange, so I cannot put stop losses in that work 24/7. I can only trade daytime there. And that, so if I enter Solana again on the outbreak here, it will be on a traditional exchange with or without leverage, but where I can put in stop losses and put them in profit so they are securing the trade. So I think from here up to here, I think it was pretty safe. And the reason I did it was because where I live, the only way for me to buy this through some kind of pension fund is the traditional banks. And then there's no capital gain tax. So what I bought here and sold here, zero tax on that. If I would have done the same on a crypto exchange, I would have needed to pay tax on that profit. Ethereum, kind of similar strategy. We bought down here also. I think it was actually this one, and then it dipped down, but I just kept that trade. And here I flipped it around, but here I didn't step out as in Solana. I just switched from the ETFs to spot so that I can put in stop losses in profit from the entry. And Ethereum is quite interesting now because it is breaking out of this linear trend line that we've been following for 2 years. And as you can see, we have some deviations from it. These are 2 standard deviations up here. It's not uncommon that things even go 3 standard deviations away. Basically 5% of the data is expected to be outside here, and 1% is expected to even reach the 3 standard deviation, which is around all-time high here, a little bit above. So I think we can go up to all-time high, break it, But if we continue after that, we're also breaking this linear trend, which have fundamental implications because there is a reason this trend is linear, there is a reason Bitcoin is exponential. And I will do a specific video about that, how to merge the how to integrate fundamentals with analytics. It's actually a trend in many industries right now to do analysis this way. As you also might remember, when we were up here, I said we need one more pullback if we're going to break this this resistance here, the red line. We did get that pullback. So now we've had two pullbacks, one here, and then I do think we need one more somewhere to actually break the all-time high. If we do not have that and keep going, well, that basically usually means that the fall will come fast and be deep and heavy. If we keep going up and having these pullbacks, I think, and keep going up way above 5, then I think that this linear trend we have to conclude after 2 years is broken, and we can also think about what that means fundamentally, what have changed. But if we just keep going straight up without these pullbacks, then I really don't care how high we go. I think it will all crash down to this linear trend again in such a situation, because that is just a pure bubble warning. What you see here is the 1 month chart for cryptos. It's like 12, 14 or something cryptocurrencies and their pattern. And what is interesting here is that when we color this after the date, you can see that we have most of June in blue here, then we have most of July in green, and then we have most of August in red. It's not exactly those months, but it doesn't matter. There's 3 distinct clusters where we have been moving around, and right now we are here in the red. So what is interesting here is if now the market will move, either keep being in red or go back to the green, yellow here, or go to the blue, it means that then the pattern of the market goes back to something we've had before. So then we can look in the chart what happens in this time frame. What did Ethereum, Bitcoin, Solana, and the other cryptos do? Did anything specific happen? Because chances are then that whatever happened then is going to repeat. Not on the absolute level. If we were at 100k here, we'll not go to 100. But if something increased 10%, something else decreased 20%, that is likely to repeat if we go back. And it's a little bit like a fractal, even though it's validated on 14 cryptocurrencies at the same time. So the principle is the same. It looks at pattern, but the statistical validity, which is usually pretty much 0 on a fractal because you haven't validated it yet, is much, much higher here because it comes from multiple sources, multiple time frames at the same time. The only thing to watch out with here, though, is that the residuals have started to go up, which means that it basically is a measure from how well the model covers the actual data. And when the residuals do go off, it either means that the model isn't working so well, but also which often means that the market is in for a little bit of a higher move. This is still work in progress. I haven't really validated everything here, but the residuals are always important in this analysis. And basically, I'm trying to find a model where you look at the different principal component and the residuals to see if there's any specific pattern that highlight in which direction any specific coin is going. But this is still a work in progress. I had this pretty well set up 2 years ago when I had a different channel, and then it worked for quite some time, but then due to IT issues and other changes, that very well designed, very complex model has been missing from my analytics for quite some time. But as you can see, we do pretty well without it. But if we go to Euler's exponential, you can see we've been following this green midline for 28, 29 months or something like this. First time I showed this publicly, we were around here, and it predicted back then, I think 180 by the end of the year. So the prediction have changed a little bit with the new data we have. Now it's around 160 here. But in contrast, I don't know of any other model that have predicted half a year, and 2 years ahead of time and been even close to correct. What is interesting here now that we have for quite some time been going quite close to this prediction line. This very traditional wave pattern might be a little bit fading out unless we're just doing some fakes here and then we will continue to go around this line. It's a little bit of a different pattern we're seeing. which is also normal. Patterns are very tradable, but they don't stay around forever. So that's the annoying part. When you find a pattern, you might get stuck in your mind that this pattern needs to happen again and again because it worked once or twice. But you can see this first part here, we had one sort of pattern where we crossed this line with some sort of regularity. That then changed, and this time to cross the line became larger. And if we cross it now, it becomes even larger. And also we haven't really, as you can see here, we have mainly been going up and down around it. Now we've been going in parallel with it for a longer time than we've done before. We did a little bit similar here and maybe a little bit similar here, but overall it seems like the market is transitioning a little bit into something new. Because what we would have expected here is maybe a little pullback here and then up here, and then maybe one final touch before we potentially get the traditional 4-year cycle blow off top. But I'm not so convinced we will get that anymore. Or actually I said that already 2 years ago, but then I had less data to go on, and it was more fundamental reasoning to why the 4-year cycle might be over. Now we have more and more data to go on also. Once again, that will also come back in a special video. Basically what I want to say with this one is that we are quite close to this line. When we are close to the upper or lower side here, we usually can use that also for entries. This is also when I might go into with ETFs where I cannot put stop losses that work 24/7 in, because I think these entries are safer. Just my opinion of financial advice. I normally don't sell just because we hit this line, even though you can see that that would have been a profitable way to do it. I simply move my stop losses higher and higher up, so they will trigger automatically. And particularly this year, because if we have a traditional cycle or previous cycle, they have gone way beyond this line. And we come back to the specific targets I have here, if I would call the top and say this is a traditional cycle, or if it looks to be ending in some other way than the traditional cycles have been doing. As you can see down here, when we went up, we did go up, and then we did go and pretty much retested the line again. This time we didn't really do that. We go up, we went down a little bit, and then we kept going up. And the distance from this line to the dotted line is the same because it's built on standard deviation. So relatively speaking, this is the same distance all the time, even though it might look smaller here. It is, relatively speaking, the same number of percentage. It moves every time it goes up and down between this line. And I could speculate that this has to do maybe with more and more institutional players who have the treasuries and so on that keep buying on a schedule more, because that doesn't really let the market reset and go all the way back. That could be a reason. Particularly if this continues, and we keep doing a little bit longer of this, then I would definitely say that. Because if we would continue this a little bit more, then I think we can statistically say this is a new pattern, and we can try to analyze that and see what that means. So far, though, we just followed Euler's exponential perfectly, so it could just mean that the prediction will be even more accurate if we don't take out the swings to the up and the right that much. Well, that was it for today. Thank you very much for all the support. Thank you for watching, and keep writing in comments and ask questions. And as you can see, some of your questions, or many of your questions, also became their own video as soon as I have time. Hope to see you soon all again.